Bitcoin's got some interesting things going on. The fees are down. The month of May has historically a positive outlook. We've got earnings for CleanSpark and Mara coming out after the bell today. I'll do a second video for that later on in the afternoon. And I'd also like to close up the day talking a little bit about TMF and IWM. I haven't talked about them in a while, and I think they're starting to heat up, get a little interesting here with some of the news coming up pretty soon on those. So I'd like to be prepared for those when it does come. So I'm looking at them now while they're all beaten down. So first of all, let's look at the Bitcoin costs right now. So these are the transaction fees. You can see they're way, way down. These are really, really low, actually, for now, compared to what we were seeing around the halving period. These are very, very low. So that's not really great for the miners right now. We would need to see those increase to really feel good about the position of the miners in terms of their revenue from the network. So if you remember, this number was up in the 20s last month, and now it's $1.65. So that's a bit rough. Not fantastic in terms of the miners. It's fantastic if you're trying to move Bitcoin around. So there's a silver lining there for it. Let's take a look at Bitcoin returns by month. We can see here we're currently in the month of May. We're currently up 2.4% so far for the month of May. The average up move for May is 7%. So that's not bad. We're in a typically positive month now. In April, it's plus almost 13% is the average move. And we ended up being negative 14.76%, which is really only the second worst performance in April of Bitcoin in its entire existence. So that was a really bad April last month. Let's take a look at Bitcoin to have some outlooks on that. So currently, I do think that short term, we are looking a bit bearish. And I think that because we created a lower low here, which was lower than, the 59,000 back in mid-April. And then we made a lower high here on May 6th, which was 65,500 versus 67,200 back here in April. And now we are getting these candles here that have got these wicks on top, right? These three candles right here, all with wicks on top, all coming a little bit lower each time. I don't like that. That is actually showing some controlled selling, so I don't hate it. It's not the worst thing in the world, but it does not bode well for the short term. Now, something that does kind of bode decently for the short term is, if I can turn off that one, is that the volume is decreasing as it falls. So we're getting lowering volume while it's decreasing. So this means that it is slowing down. The selling is slowing down. There could be a flash back down to this $57,000 area, maybe even all the way down to 52,000. Like that's still in the cards, and the candles are showing that it is still in the cards, especially with this lower low, lower high pattern that we've got right now. And this has actually been going on since early April, and that is concerning a little bit in the short term. So that's something to keep in mind. Something that I do really like about this chart, though, is if we zoom way, way out, that is quite the cup and handle forming, isn't it? We got this cup here starting all the way back in November 2021. It goes all the way down to that 15,000, then all the way back up to 74,000. And currently we're making this handle right here. And this handle is great. This handle could come all the way. Honestly, 52,000 would be a fine handle, but it could come all the way down to $42,000 and still be bullish. Like we could come all the way to 42,000, all the way down to this line, and we're still bullish on this cup and handle formation if that comes all the way down to there. I don't think it really will get that low. I'm just saying it could come all the way down to that and still be a bullish outlook in terms of this pattern. I am thinking it probably will not do that just based on previous cup and handle behavior I've seen on Bitcoin that tends to do shallower handles followed by explosive moves up. So I do think maybe 57, possibly 52 would be the lowest it would go on this handle. And then from there, we'd start seeing explosive moves up. Very similar to like what we saw back here. Let me break it. Actually, there's a couple I can point out here. So we had this cup right here that was March 2022 until January 2024, right? We came all the way down, up, and then over here, let me get that out of my way. We had this shallow candle right here that just came into and just tapped the top of this bull flag from before it, right? Just came, tapped it, and then took off. And if it were to do a similar pattern this time, if it were to do a similar pattern this time, we would see a nice big long wick potentially down to 53 to maybe 52,000 at the lowest, and then it would start turning around from there. Now, you could argue that on the weekly here, we've already seen this pattern start to play out with this, let me turn this off, with this candle here from April 29th, where we got this nice big long wick, and then it came up again on it from a low. If we get and close this week up and above it, this $63,000, $64,000 range, if we close up and above that, I would be leaning towards saying that that could be the hammer at the bottom of the move, because this is a hammer candle. I could be convinced that that is the hammer at the bottom of this move. If this candle for this week turns green, I could be convinced of that. If not, I would be looking for a potential wick, a quick wick down to like the high 52,000 range before turning around on this. And remember, that's still bullish. That's still very, very bullish on the Bitcoin chart overall. If this cup and handle plays out, that is the pattern that is going to take us up and over $100,000 easily if this plays out on Bitcoin. Okay, let's take a look at CleanSpark and Mara real quick. They are going to report today. There's something really actually important. Let me go back to Bitcoin for that to point out with this. Let me see here. Let me go to the daily. Yeah, okay. So something I've been noticing with earnings lately, and it's happened on two of the miners so far. Let me turn off volume too, so I can just have a nice, turn this off, turn this off. Okay. Earnings. See it, right? And they had a slight miss on revenue. Well, that's more than a slight miss. Big on earnings per share. It went up a little bit and then came right back down again. And in fact, on the earnings news, it fell. And same thing with Cypher. They had positive earnings. They had positive earnings, missed on revenue, and that was a big sell-off. So I'm expecting a similar kind of report here, right? I'm expecting there to be a beat on earnings per share, maybe a miss on revenue. We'll see. Perhaps that's the case since it's been the case with two others. And if we get that same kind of pattern, I'm expecting price to come down to about 15, maybe even into the 14s on CleanSpark. Even if earnings per share is a beat, I'm expecting there to be, if revenue isn't also a beat, I'm looking for it to come down to like the 15, maybe dip below $15 on CleanSpark. And that's the same with Mara, especially with today's candle, the way we're opening going into earnings. It's not optimistic. It's down 5%. I actually, right before recording this video, I closed two of my Mara calls in order to get back into them after the after the earnings report. Because we did open up beneath 1980, which is that level, and I saw that this morning, and I said, no, I have to close those out, and I have to wait till earnings is over before I decide what I'm going to do with my Mara right now. So I closed my calls on Mara this morning. I intend to open them again after earnings. And this is exactly the same sort of situation. I'm looking for a beat on earnings per share and potentially a miss on revenue. And if there is that miss on revenue, I'm expecting Mara to come all the way back down into the 17s, maybe test the $16, $15 range again on Mara. And if that happens, I'm actually still decently bullish on this, because right now, if you look here, since April 17th, we've been making higher high, higher low pattern, right? A higher high, higher low pattern. If we stay above 1561, even if this news comes out bad, if we stay above 1561, this is still a higher high, higher low pattern. And I'd be looking for a potential triple bottom, head and shoulders sort of scenario going on down here at the bottom. Right now, I'm looking at a double bottom potential here, bottom there, bottom here. Midline is 1980. It's just poetic there. And it closes up and above that 1980. I'm looking for a very quick move up to 2277. If we conquer 2277, I'm looking for a very, very fast move up into the high 20s, maybe low 30s again on Mara. So keep that in mind. I'm looking for that to happen with that, and if earnings comes out the way that I'm expecting them to. And that's the only two I'm going to cover today. Nah, screw it. I'll do the other ones. Riot, let's take a look at Riot. Riot down 2.5% today, hanging out beneath my box. Don't love that. That's actually kind of not great. This looks like It's forming potentially another leg down, trying to come down to that $9 range again on RIOT. Bit digital, same thing. It's just getting compressed. It's getting just absolutely compressed in this area here between about 190 and 232. It's just getting compressed in there like a spring. Let's take a look at the SMAs. Let me hide the drawings here. Yeah, it's just getting compressed. And once this compression lets go, though, this thing's going to shoot above all these SMAs really, really fast when it does. Let's take a look at Bitfarms. Same sort of situation. It's down 3% today. We're down at $1.78. We're just getting compressed now, and it's waiting for some kind of catalyst to just send it flying high. And that's what we're looking at. We really need to get above. Look at this. Yeah, we need to get above this trend here. Let me raise this actually a little bit higher. About right there is what I'm looking at for Bitfarms. It needs to get above this, and then we have a chance of going to the top of this other channel here after that closes out. We do have a bit of an inverse head and shoulders playing out here. Let me turn off all this stuff. Playing out starting uh, March 11th, and so you can see a shoulder. Then the head was all the way down on April 16th. The other shoulder was May 2nd. If we get above that, which I think I have it drawn on there. Yeah, if we get above that, which is this channel here, this is the neckline. In that line right now, we would need to get above $2. Basically, once we get above $2, it's breaking that slanted head and shoulders. And if that breaks, that could kind of take us pretty quickly all the way up back into this $3 range when it happens on Bitfarms. So keep an eye on that. Now, of course, to the downside, we are in a precarious spot on Bitfarms. If it gets below $1.66, below $1.66, timber, and we're coming all the way down to $1.24 if that happens. That's the risk. That's pretty scary. So we could go up to $3, we could come down to $1.24. That's the reality of Bitfarms right now. Let's take a look at IREN real fast. IREN is only down 3%. It's not doing so bad. It looks very much like the Bitfarms chart, actually almost identical there. With that, let's take a look at WULF real quick. Same sort of thing, looks exactly like the other ones, except it's doing a compression pattern towards the upside. So once this thing breaks out above 279 on WULF, I'd be looking for it to very quickly come up to 344 and start looking at trying to test the highs at $4 again on WULF. Now, let's close this out by looking at TMF. Now, first I'm going to look at the Fed Watch tool. Everyone was expecting them to cut by now. They haven't. They're not going to. June 12th, it looks like there's a 91% chance they will not cut. July is, 70% chance that they will not cut at this point now, unless something breaks, unless something dramatically changes between now and then, they likely will not cut. The other thing is September. There's a 64.5% chance that the Fed will cut in September. I think this is probably accurate. I think they may actually do a cut in September because they said they want to do a cut. I really think they're going to do a cut before the election, and September is really their last chance to pull that off in order to do it. And this is what I'm looking at. September cut. Maybe if something breaks, a July cut. And why is that important? It's important because TMF. Right, TMF is the bonds. It's the 20-year triple leveraged bonds. This thing has been in an aggressive downturn since 2022. I mean, honestly, it's been in a downturn for a while. It's been in a downturn since, what, 2020, to be honest. But it's been in like this trapped zone since 2022 as people thought rates would eventually be cut, and they just kept getting longer and longer and longer out in terms of rates being high. Now, once we get out of this downward channel, once we break it, solidly break it, this thing's going to go real fast. It's going to go real fast up to quickly first 60, then 75. Once it breaks through all that, there's going to be a lot more struggle after 75 up to 100. And once it gets through 100, we're going all the way up to like 120 real fast. Now, current patterns are actually looking okay. So right now I'm looking at a head and shoulders. And let me turn this onto a line chart so you can see a little better. Okay. Shoulder here, April 23rd, another one April 26th, head April 26th, right shoulder May, April 30th. Okay, that's what I'm looking at there. Now, you could say that this may have already played out. Actually, I wouldn't say it because it would have to come up to $49 to like play out on the smaller scale. But we get this fully, now that it's building up some more momentum here, I think that this is just going to be a stopping point, right where it currently is. And I think that that's going to be what takes it up and over $50. to be honest, this little head and shoulders move right here. It's going to take it up to 50 bucks. Last time we saw a head and shoulders move, it was right here, October 4th. October 24th was the head, and then November 9th was the right shoulder. And once we saw that break, which the break line was $49, once we saw it go above that, it shot very quickly up to $67. They cut rates. This thing's going to go all the way back up to that cycle high of $67 very, very fast. Once that happens, as soon as they cut rates, like the day they say we cut rates, this thing's going to go up to $67, maybe $70 in a heartbeat. So this is one that I hate to say that I would front run it. Now, I haven't bought any yet. I'm looking at potentially starting to accumulate some maybe this month, later this month, maybe after the next Fed meeting when they don't cut again. I'll be looking for this, but it is going to remain compressed until they cut. But once they cut, this thing's going to be a rocket, is what is likely to happen very, very quickly after they cut on this one, because this is extremely rate sensitive. So I'd be looking for it to come all the way up to like $60 quite quickly, maybe even up into the 70s very, very fast once they cut. Now remember, they have to cut. If you're holding this thing and you say, oh, it's not moving, it's going down, it's never going up, that's because they haven't cut yet. Once the Fed cuts rates, that's when this thing is going to absolutely take off. And it will not do that until they cut the rates. So that's something to keep in mind for TMF. This is going to be a very good trade once the Fed cuts the rates. So I'm still just watching it. I haven't gotten into it yet. I'm just waiting for that rate cut to look like it is very likely going to get close. And then I'll be getting in this for a very fast, like 20, 30% move on this thing. That's what I'd be looking for. Let's close out the day with IWM. IWM, I haven't talked about it in a little while. Last time I was talking about it, it was up here trying to break 210. It still needs to break 210 really in order to get bullish for me. I think that it will likely come back to 200 again before making a run for that move. But right now things are kind of encouraging. So we made a low down here at 191, and then we came and made a cycle high somewhere, yes, at 199. Then we came down to 193, which was a higher low. Then we came up to 249, which was a higher high, then down to 195, which was again a higher low. And now we've made another higher high at 206. If we make another low anywhere above 195, that is a continuation of the higher high, higher low pattern on IWM. IWM is also very rate sensitive. It is waiting for a rate cut to really do a big, big move. Now there is room for this once it comes back down and makes its next low. There is room for it to come back to 210 and test that 210. So I'm looking for the next low, for it to turn around at the next low and then make a run for 210 on IWM. Once it breaks 210, that's when it gets interesting. Once we break 210, I'd be looking for a move all the way up to 220 very quickly, and then after that about 230, potentially making a run for the highs at 244 at some point in the future after they start cutting the rates. Now, it's not going to be just straight up. There will be lots of choppiness and stuff. You can see this is a very, very choppy, ugly chart as for the most part. But we are seeing this Wyckoff bottom starting to come to an end. And once we get above 210 and hold above 210, that's going to be a mark of that end of that bottom of that accumulation zone. And then we'll very quickly be going up into the 200s, the mid 200s, maybe even to the high 200s on this thing. We'll see what happens with it. But that's my assessment on IWM right now. I am looking for it to continue to come down a little bit, make a higher low. Once it makes that higher low, I want to see it start turning around and make a run for 206, potentially even 210. That's all I've got for you today. Please like, comment, and subscribe, and have a profitable day.